Hello everyone, welcome and thanks for watching the Market Report. This is Marcel Pechman, analyst and writer at Cointelegraph. Today's show will be debating the most pressing topics impacting the crypto market, and it airs every Tuesday exclusively on the Cointelegraph Markets and Research YouTube channel. Today's show is sponsored by XGO. We'll start by discussing an article written by Yashu. Why is Bitcoin price stuck? Bitcoin is a volatile asset, but its price can get stuck inside narrow trading range for weeks, if not months, for multiple reasons. One major event will be the Federal Reserve's decision on interest rates next month. Currently, the conflicting outlook on raising interest rates, it's likely the main factor behind a sideways action on the stocks, including risk assets and cryptocurrencies. I know it might sound counterintuitive, but historical evidence shows us that the largest price moves tend to occur after periods of low volatility, meaning when the asset price was kind of moving up 1%, moving down 1%, but not having spikes of 5 or 10% on daily candles. So after those periods of quiet moves, historically speaking, it's where the biggest price hikes or pumps occur. The reason? Traders tend to get overconfident, and even the whales and market makers are seeking higher gains, so they add leverage as the asset price is not fluctuating too much. So by adding leverage, they create risks of liquidation. Furthermore, the options instrument becomes cheaper. So that's derivatives contracts that provides the buyer the right to buy or sell an asset for a fixed price in the future. So all of that creates a perfect storm for a strong breakout. So ultimately, stop loss orders and liquidations further boost the price swing. Personally, I don't think that it's the Fed's decision on June 14 that's going to be the trigger, because everyone is expecting it to remain stable, the interest rates, at the current 5% level. In fact, 80% of the market according to CME. So that's the CME target rate probabilities for 14th of June Fed meeting, and you have 79% stuck in the current 5% range. So I don't think that the Fed decision on June 14 is going to be the trigger that will break Bitcoin from this range between 26,000 and 27,000. From my 20-year experience in trading, those events tend to come out of nowhere. For instance, a war breaking out, a bankruptcy of a large lender, or an unexpected economic or political decision. Just to highlight, that's my own personal opinion, does not constitute financial advice, nor it reflects Cointelegraph's official view. Now, on to the next topic, written by Ana Paula Pereira. We'll dissect what Biden has been saying about wealthy crypto traders cheating on their taxes. President Joe Biden has expressed opposition to a debt ceiling deal that he says would benefit wealthy tax cheats and crypto traders while putting food assistance programs at a risk. The alleged protections for crypto traders refer to tax loss harvesting. Crypto tax loss harvesting is a strategy that investors use to reduce their overall tax liabilities. It involves selling crypto at a loss to offset capital gains from a recent profit. To claim a loss, both assets must be traded within 30 days. So, first things first, tax loss harvesting is nothing new, and it's fairly common in the stock, mutual funds, and commodities markets. Even if Biden gets a victory and it doesn't get nulled by the Supreme Court later on, investors could use instruments such as ETFs and trust funds to trade crypto and still benefit from the tax loophole. But in the end, there seems to be no basis, no ground for Biden to differentiate asset classes solely based on his personal views, on his liking. As far as I know, that's not how regulation works. Sure, that's nothing stopping the Congress from trying it, but it could be taken to court, and I don't think Biden is in a bargaining position right now because the government is less than 10 days from a shutdown when the money ends and the US will be unable to pay its government employees and debt. My take: Biden is desperate to blame the Republicans for the US government shutdown and eventual debt default. But the truth is, the offer from Republicans is on the table. The ceiling can be lifted, can be increased by $1.5 trillion as long as the government drops the outrageous expenditures, including hiring 90,000 IRS employees. On our third and final article, we'll visit an article written by myself covering the speculation of an imminent breakout. Bitcoin's price could be on the verge of a bullish breakout according to the risk data. But usually, the macroeconomic scenario will dictate the trend. Bitcoin's price has stabilized near $27,000 since May 13. This movement is eerily similar to early April, when Bitcoin's 12-hour chart ranged between 27.8 and 28.7 for 11 days. Traders are now questioning whether a bullish breakout is the next possible outcome for Bitcoin price. So let's check the chart, and you can see that in early April, there were 11 consecutive days of range trading, which is eerily similar to the current movement. So traders speculate if this 8% positive move, the bullish breakout that followed, is going to repeat itself, shooting us to $29,000. Analyzing whether Bitcoin derivatives market structure resembles the early April is the first step to understand the odds of breaking above $29,000, if the macroeconomic environment allows us. So we will start by measuring the Bitcoin futures premium, which measures the quarterly contracts against the regular spot markets. It should trade at a 5 to 10% premium in neutral markets, and that's not something specific for crypto. It happens on every market. As sellers postpone the settlement, as the money is locked for 36 days, they demand additional money. That's why Bitcoin quarterly futures trade at a premium, and this premium should be between 5 to 10% to compensate the time and the risks. Notice that on early April, this premium flirted with 5%, but it stuck near 4% during the period. So it indicated neutral to moderate market. It was flirting with optimism, with bullishness above 5%. It didn't happen, but it was still neutral at 4%. That's the opposite of what we're seeing right now. It flirted with zero, with a negative premium, which indicates bearishness, and it stuck below 2%. So we're in a much worse place according to Bitcoin futures premium. There's low demand for leverage longs. There's more demand for shorts, for those leverage bets against Bitcoin price. We're now going to move to the options markets. The 25% delta skew is a telling sign when arbitrage desks and market makers are overcharging either for upside or downside protection. In essence, if the traders anticipate a Bitcoin price drop, the skew metric will go up above 7%. If there's phase of excitement, if the market is overhyped, the skew will move negative, below minus 7%. So notice that in early April, in late March, the skew metric flirted with the bullish area at minus 8%. Then it gradually became worse until reaching zero before the price pump. That is the perfect position for a surprise rally, as traders were gradually losing faith according to options pricing. On the other hand, the most recent range trading period, initiated on May 13, displayed balanced pricing between the call and put options, perfectly reflecting how unsure traders are due to uncertain macroeconomic conditions. So we're pretty close to zero, indicating that both puts and call options are trading at the same price. Okay, so what's the bottom line of those two Bitcoin metrics? We saw that back in April, Bitcoin rallied 8% after breaking the 11-day range trading period. But this time is different, as the two derivative metrics indicator shows. That doesn't mean it is impossible for bulls to get ahead, but it's less likely according to those metrics. Well, that's it for today. I hope you enjoyed the show. Don't forget to visit Markets Pro, the professional Cointelegraph alerts platform. Our proprietary indicators have been giving profitable alerts for months. There's a 20% discount link on the video's description. Remember to like and subscribe the new Cointelegraph Markets and Research YouTube channel. See you!